Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video.
Hi everyone, this is the third video of joint venture chapter, and in the previous two videos we have seen the concept of joint venture and also we have solved a simple problem of joint venture which was based upon the first method, that is when separate set of books are maintained. Okay, that is when separate set of books are maintained. Now in this video we are going to solve this simple problem which is based upon the second method, so we will see that. Now first let's get to the question. See, Karthik and Shivraj entered into a joint venture agreeing to share the profits and losses equally. So here these two persons, Karthik and Shivraj, has formed this temporary partnership which is called as joint venture, which comes to an end after the project, after their purpose. So now they have formed this joint venture and they have agreed to share the profits and losses equally, that is in the ratio 1:1. Alright. Okay, then it is said Karthik purchased goods worth rupees 15,000 and sent to Shivraj. Okay, so he has purchased some goods worth rupees 15,000 and sent those goods to Shivraj, and he has also incurred an expense of rupees 1,500 for carriage. Okay, he has also incurred an expense of rupees 1,500, and then Shivraj also purchased goods worth rupees 12,750 and spent rupees 750 for advertisement. So here Shivraj has also purchased goods of rupees 12,750 and 750 for advertisement. So we'll see that later. See here, then it is said Shivraj sold all the goods for rupees 37,500 and sent a bank draft for the amount due to Karthik. So you see here this Shivraj has sold all the goods. That means Shivraj has received this money. Shivraj got the money. So now in this money there is also a share of Karthik, right? There is also a share of Karthik because he's a partner, he's a co-venturer. So now what he will do, he will take his profit, Shivraj will take his profit and he will take his share, and then whatever amount is left, whatever money is left due to Karthik, he will give it to Karthik. So same thing he did and send a bank draft for the amount due to Karthik. So here it is said Shivraj gave the money to Karthik. Okay, so we will do that entry later. And then here it is said give the journal entries and also the necessary ledger accounts in the books of Karthik. So you see this sentence, prepared in the books of Karthik, necessary ledger account in the books of Karthik. So by this line, by this sentence, you can understand that this is second method. This is second method because here it is specifically said that prepare the accounts in the books of Karthik. Yes, so you have to prepare in the books of each co-venturer. That is the second method, in the books of each co-venturer. Each co-venturer will prepare his own books. He will prepare joint venture account and other venturers account. See what I mean by this. Here there are two co-venturers, right? Karthik and Shivraj. So Karthik will prepare joint venture account as well as Shivraj will also prepare joint venture account. And then they will prepare other co-venturers account. Shivraj will prepare Karthik's account and Karthik will prepare Shivraj account because they have to keep the track of each other, right? So they will prepare other co-venturer account. Okay. So this is what is meant by when each co-venturer maintains books. And to prepare the joint venture, the rule is same. Okay, debit all the expenses and credit all the revenues. Here also same. Okay, we will see this. Now let's solve this problem and prepare the journal entries and then we'll see the ledger accounts. Easy, right? Okay. Now before solving the problem, I just want to tell you that in joint venture, we do not prepare proper records. Proper records are not maintained in joint venture. Here we open only very few accounts like joint venture account and co-venturers account, and we prepare some journal entries. But in partnership we used to prepare all the proper records, right? Journal, ledgers, trial balance, profit and loss, appropriation account, balance sheet, etc. That we will not do in joint venture because in joint venture we have to maintain limited records. Okay, limited records because joint venture is only meant for short duration, maximum 2 years. Hardly 2 years. Okay, it is only for 6 months, 3 months or 1 month, like that. So joint venture is only meant for short duration, so it is not profitable, it is not economical to go long procedure over here. Here we will fulfill our objectives to find out the profit of joint venture, etc. with only very few accounts. Alright, so we will prepare only limited number of accounts. Okay, keep that in mind. Now let's solve this question. Now let's solve this problem. First we have to prepare the journal entries in the books of Karthik. Why in the books of Karthik? Because in the question it is specifically mentioned prepare the necessary ledger accounts and the journal entries in the books of Karthik. So we are preparing the journal entries and the ledger accounts in the books of Karthik. Okay, now let's start. At first, what happened? At first, these two persons, Karthik and Shivraj, they came together and formed this temporary partnership, this temporary business only meant for short duration. So this is called joint venture. And these two persons are called co-venturers, right? Now, to do the business, Karthik purchased goods rupees 15,000. Now, he has purchased these goods for the joint venture, right? So now expense is increasing. Expense of joint venture is increasing. I told you, right, in the previous video, when the expense of joint venture increases, what you need to do? You need to debit the joint venture account. It is similar to trading and profit and loss accounts. So you have to debit the joint venture account. And who has purchased those goods? They are purchased by Karthik, right? They are purchased by Karthik. But you are preparing the accounts in the books of Karthik. You are preparing the entries in the books of Karthik. So you can't take Karthik's name. You can't take Karthik's name. So you have to take his bank account. Okay, you have to take his bank account. See the entry. The entry would be joint venture account debit because expense is increasing. Joint venture account will be debited 15,000 and bank account will be credited. You cannot take Karthik name over here, right? Because we are preparing in the books of Karthik. So in the books of Karthik, Karthik's name will never come. Alright, so his bank account will come to bank account because his bank account is decreasing. He has paid for those goods. So his bank account is decreasing, asset is decreasing, so bank account is credited. Cash is going out, right? So it is credited and joint venture account is debited because expense is increasing. Fine? Simple, right? Okay. And then Karthik sent those goods to Shivraj because Shivraj is going to sell those goods. So now he has sent those goods to Shivraj because they are doing business together, right? So he can do anything. He can send those goods to Shivraj, anything he can do. Now, to send those goods, he has incurred an expense of 1,500 on carriage. Okay, so now this expense, again the expense is increasing. Expense of joint venture is increasing, right? So joint venture account debit. Whenever expense increases, joint venture account debit. See, joint venture account debit. And now who incurred that expense? Karthik. Karthik incurred that expense, right? So now his bank account will get credited to bank account. Again, the Karthik name will not come. So his bank account will come to bank account because his bank account is decreasing. He has paid for that expense. So to bank account 1,500. Simple, right? Okay. And then what happened? And then this Shivraj also purchased goods of rupees 12,750. Now he purchased those goods. So now you know this is also an expense. So now expense is again increasing. Whenever expense increases, you have to debit the joint venture account. See, it's very simple. Joint venture account to Shivraj. Why Shivraj? See, expense is increasing, right? So joint venture account is debited. So 12,750 is debited. But why Shivraj account is credited? That is because Shivraj purchased those goods. Those goods were purchased by Shivraj, right? 12,750. That's why Shivraj capital account will get credited. Simple. Okay. And then what happened? And Shivraj also incurred expense of rupees 750 on advertisement. Okay, on advertisement he incurred an expense of 750. So now again the expense is increasing. Advertisement is also an expense, right? To boost the sales, you are doing advertisement. So now again the expense is increasing. Whenever expense increases, you have to debit the joint venture account. Now see the fourth entry. The fourth entry would be joint venture account debit. Expense is increasing. Advertisement is expense. So it is increasing. So joint venture account is getting debited by 750. And then who incurred that expense? That expense was incurred by Shivraj. So his account will get credited by 750. Simple, right? These entries are very simple. Expense is increasing. Who incurred that expense? The person who incurred that expense, his name will come. That's it. Okay, simple, right? And then what happened? And then Shivraj sold all the goods for 37,500. So now the entry would be Shivraj account debit 37,500 to joint venture account 37,500. Now, what's the meaning of this entry? See, it's very simple. What is sales? Tell me, what is sales? Sales is revenue, right? Sales is income. When you sell something, you get cash, you get money. So sales is income. Now I told you joint venture account is similar to trading and profit and loss account. If there is any revenue, if there is any increase in revenue, you have to credit the joint venture account. Okay, whenever there is revenue or income, you have to credit the joint venture account. So here joint venture account will be credited. Now who sold these goods? These goods were sold by Shivraj. So his account will get debited. At first you need to do two joint venture account, because directly you come to know, right, sales is a revenue, so due to revenue joint venture account will get credited, directly credit the joint venture. And then who sold these goods? These goods were sold by Shivraj, so his account will get debited. It's really simple. And then at last you have to find out the profit of the joint venture. Now they have done this business, now you have to find out the profit that happened due to this joint venture, due to this business. Now see, it's very easy to calculate the profit. See, first I will show you the entry. Joint venture account debit 7,500, and then to profit and loss account and to Shivraj account. See, now leave the entry. First we will calculate the profit. See, to calculate the profit you have to compare all joint venture columns, all the joint venture amounts. See here, joint venture first 15,000 it's debited, and then again here 1,500 is debited, and then here 12,750, and then here 750 is debited. So we have 4 debits of joint venture, right? Now tell me, what is joint venture account? It is similar to trading and profit and loss account. So the debit side shows all the expenses and credit side shows all the revenue. That means if revenue is more, then it is profit. Yes, if you have income more and expense less, then it is profit. So the same concept applies over here. If the credit side is more, it is profit. If debit side is more, it is loss. Okay, so here let's check joint venture account. The first amount is 15,000 debit, okay, then 1,500, and then 12,750, and then there is 750. So it is equal to 30,000. See, there is total 30,000 of debit, 30,000 of expense, and compare it with the revenue, compare it with the credit side. You see the credit side of joint venture is 37,500. See, the debit side is 30,000, so that means 7,500 is the profit. So the debit side is shorter, expense is short by 7,500, so you have to debit that 7,500, that profit. Now this profit has to be distributed among the Karthik and Shivraj, because they are the co-venturers, right? They are the owners of the joint venture. Now how to distribute? See, in the question it is given, okay, 1:1 is the profit sharing ratio. So you have to distribute it equally. 3750, see, 7,500 into 1 divided by 2, that is equal to 3750. So you have to give 3750 to each of the co-venturers. And again, joint venture account debit to Karthik. Here Karthik was supposed to come, but since we are preparing in the books of Karthik, so we cannot take Karthik's name. We have to take profit and loss account, his profit and loss account, Karthik's profit and loss account. Okay, he will get his money, and then Shivraj account will also be increased by 3750. Their capital account will get increased. Okay, Shivraj account will get increased, his capital account. So 3750 will get credited. Simple, right? Why here it is debited? Because there is shortage on the debit side. That is why I took joint venture account debit 7500. Simple. This is the profit entry. And then at last you need to find out the balance in the Shivraj account. You need to find out the balance in the Shivraj account. See, at last what happened? Shivraj sold the goods, right? 37,500, and then he received all this money in his account. He received all this money in his account, and now he has to take his share and everything, his profit, and then whatever money is left, he has to give that money to Karthik, right? So that is what we are going to do. We are going to find out the balance in the Shivraj account, and that balance will go to Karthik. Okay, see, you have to find out the balance of the Shivraj account. See how to find out the balance. You have to compare all the Shivraj amounts. See here, you have credit amount of 12,750. Yes, and then again you have here credit amount of 750, and then there is also profit 3750. Let's add up. See, 12,750 plus 750. Yes, 750. Then there is profit of 3750. So his credit side is, see, 3750, which is equal to 17,250. And I think there is one more. Where is it? Yeah, there is one more, right? 37,500. So add that also. Wait, that is debited. Yeah, that is debited. So this is credit amount and this is debit amount. So now subtract it. 37,500 minus 17,250, and you get 20,250. So now 20,250 is less on the credit side. There is balance on credit side. Okay, so now the Shivraj will pay to Karthik. So Karthik will receive the money. Okay, Karthik will receive the money. See here, 37,500 Shivraj account is there on the debit side, and then here there is less. Okay, here there is shortage of 20,250. 12,750 is there, here 750 is there, and then 3750 is there. So here there is shortage of 20,250. So now Shivraj will pay to Karthik. So now Karthik will receive the money. And now again, you cannot take Karthik's name, so you have to take his. See, you are preparing in the books of Karthik, right? So you cannot take Karthik's name. You have to take his bank account. Bank account of Karthik will get debited, okay, by 20,250 because he's receiving the money. His bank account is increasing, and Shivraj account is getting decreased now. So 20,250 will go out from Shivraj account. Simple, right? You understood, right? How to find out the balance in Shivraj account? You need to compare the Shivraj columns, okay, Shivraj amounts on the debit side and the credit side, and you have to find out the balance. See, here the credit side was shorter, so he had to pay to Karthik. So Karthik got the money, his bank account increased, and Shivraj account decreased. So to Shivraj account 20,250. Simple, right? Okay, now let's see the ledger accounts. Now here in this question, we have to prepare the ledger accounts in the books of Karthik as asked in the question. Alright, and the first account that we need to prepare is the joint venture account. Now, how to prepare this joint venture account? See, joint venture account is almost similar to trading and profit and loss account. Alright, it's a nominal account. So you have to debit all the expenses and you have to credit all the revenues. Okay, whenever expense increases, joint venture account debit. Whenever revenue increases, joint venture account credit. All right, that's the simple rule to prepare this account. Now let's start. At first, what happened? At first, this Karthik purchased goods of rupees 15,000. So what is purchase? Purchase is an expense. So expense is increasing. When expense increases, joint venture account debit. Okay, always remember, whenever expense increases, you have to debit the joint venture account. So joint venture account debit because of this purchase. Now you have to take to Karthik, okay, to Karthik, but I have taken bank account. Why? Because we are preparing the ledger account in the books of Karthik, yes. So you cannot take Karthik account in the books of Karthik. So you have to take his bank account, to bank account, because to purchase those goods, he used his bank account. All right, he made payment through his bank account. So to bank account 15,000. Simple, right? You understood? Expense is increasing, joint venture account debit because of the purchase, so to bank account, and in bracket you can write purchase. It's better to write, okay, examiner can understand. So 15,000. And then what happened? And then this Karthik, he sent those goods to Shivraj and incurred expense of rupees 1,500. Now again expense is increasing. Now I told you, right, whenever expense increases, joint venture account debit. All right, joint venture account debit to Karthik. But now we cannot take Karthik, so to bank account. Again, for the payment of that expense also he used bank account. So to bank account 1,500. Okay, expense is increasing, joint venture account debit to bank account. Simple, right? 1,500. Okay, and then what happened? And then this Shivraj, the other co-venturer, he also purchased goods of rupees 12,750. Now what is purchase? Purchase is again expense. So expense is increasing. Whenever expense increases, you have to debit the joint venture account. So debit the joint venture account. Now who purchased those goods? Those goods were purchased by Shivraj. So his name will come. Okay. So to Shivraj account, and in bracket you can write purchase 12,750. Expense is increasing. Joint venture account debit. Why is it increasing? Because of Shivraj. To Shivraj account 12,750. Simple, right? It's very simple to do the postings. See here. And then what happened? And then this Shivraj also incurred an expense on advertisement to boost his sales. He incurred expense on advertisement of rupees 750. Okay, 750 rupees. So now again expense is increasing. Debit the joint venture account. Okay, joint venture account debit. It is increasing because of Shivraj. To Shivraj account, he incurred an expense on advertisement. So advertisement 750 in bracket. Okay, write in bracket advertisement 750 rupees. Simple, right? Now you have got two posting over here of Shivraj. So immediately go to the Shivraj account. Alright, go to Shivraj account. And in Shivraj account, you have to take by joint venture, by joint venture. See here, you have to do cross posting. Okay, to Shivraj account is there, to Shivraj account. So here it will be by joint venture. Okay, because it is in joint venture account, right? So by joint venture account 12,750 and 750. Just cross posting, simple. And then go back to joint venture account. Now In question here you can see Shivraj at last sold all the goods for rupees 37,500. Now tell me, what is sales? Sales is revenue, isn't it? Sales is income. When you do sales, you get cash, you get money, right? So sales is income. So whenever income increases, whenever revenue increases, you have to credit the joint venture. Why revenue increase? Because of Shivraj, he sold the goods. So by Shivraj account 37,500. Okay, in bracket you can write sales. Alright, then immediately go to the Shivraj account. See, by Shivraj, right? By Shivraj. So here it will be to joint venture, cross posting. Okay, 37,500. Simple, right? Okay, and then what you need to do, and then go back to joint venture account. Now everything is over, right? Purchase entry, this expense, this purchase, this expense, and sales entry is also over. All the postings are done, right? Now you have to find out the profit of joint venture. See, it is very easy to find out the profit. See here, 15,000 is there, 12,000 is there. 15,000 plus 12,000 is how much? 10,000, 10,000, 20,000, 5 plus 2, 7, so 27,000. So all this is less than the credit side, right? So there is profit. This is income, right? This is revenue. Whenever revenue is more, it means there is profit. If expense is more, that means it is loss. But here, credit side is higher, credit side is more, so here it is profit. So find out the profit. Now how to find out the profit? See, take this bigger amount and balance this account, 37,500, write it on both the sides and then subtract it. See, 37,500 minus 15,000, okay, minus 15,000, and then subtract 1,500, and then subtract 12,750, and then subtract this also 750, then you will get 7,500 as the profit. See, the credit side is higher, the revenue is more, the income is more, and the expense is less. That means there is profit. So profit of 7,500. Now in the question it is said the profit has to be divided equally, right? 1:1. So divided equally, divided by 2. Okay, you get 3,750. So share it among the co-venturers, among the owners of joint venture. And now the first will be to profit and loss account, because you cannot take Karthik's name, so you have to take his profit and loss account. His profit will go to his profit and loss account. All right, and then you can take Shivraj account, so to Shivraj account. Then immediately this has to go to Shivraj account. Here cross posting by joint venture, in bracket you can write profit 3,750. Simple, right? Yeah, you just have to do the cross posting. Then at last this account is over, joint venture account is completed, and then you need to balance the Shivraj account. You need to balance the Shivraj account. Now how to do that? See, that's also very simple. Till now we have this and this, right? We have got all this from cross postings. This also, this was sales, and this purchase, expense, and this profit. So we have this, we don't have this, so we have to find out this. Okay, so how to do that? See now the debit side is higher, right? Debit side is more, 37,500, and you can see over here 12,000 plus 3,000 is 15,000, and add up all this, it is not more than 17,000. Yeah, it is not more than 18,000. So 37,500, that's the bigger amount, right? Write it on both the sides to balance, and then subtract it with all these amounts. 12,750 minus 750, and then subtract 3,750, you get 2,250 as the balance. Okay, this is the balancing figure, and it will be paid to the Karthik. Okay, it will be paid to the Karthik. So here it will come by bank account. From bank it will be paid, so by bank account will come. This will be the balancing figure, and this is the end of the problem. You understood, right? How to find out the balance of Shivraj account? You just have to compare these two columns, and whichever is higher, write it on both the side and then subtract it with the amounts. You know the balancing, right? It's very simple. So joint venture account is also very simple. You record all the revenues on the credit side and all the expenses on the debit side, and at last you will get the profit, and then you have to share the profit on the agreed ratio, whatever is given in the question. Okay, so this is how you do the ledger accounts of joint venture. Simple, right? It's very easy, I know. Okay.